Sorted. Yeah. Yeah, good evening, everyone. Welcome to Crypto Pulse Weekly, our weekly digests of the markets. And today, as usual, we'll be talking about what's happening on the markets, our assessment of the markets, and where that is likely to take us in the coming days, weeks, and months. So without much ado and without wasting time, let's hit the ground running in today's assessment of the markets. So yes, the market's been down for 7 weeks now, or 6 weeks plus. And there's been a lot of noise around the bull run is over. We're now in the bear markets, all sorts of speculations by various parties on where they think or what they think is happening. Well, I have news for you, and I will let you know shortly. The bear market is not here yet. We are indeed in some form of bearish correction, but there is data to suggest that it's happened before, right before our very eyes. So we have an opportunity to see it happen again. So let's get cracking on just a few items for today. I'm not going to take your time because there's really not too much to talk about. The price has been sitting around the same range for the past 6 weeks now. So let's start with the market updates. Interesting market updates. One, in terms of regulation, we'll see that there's a proposal from the government of Germany to tax crypto holders 50% of their earnings. And I saw that and I laughed. I'm like, how ridiculous is that? I mean, who is going to cash out in such an economy? They just want to make life difficult for themselves. And on the back of that, you remember last week I was saying that there was talks of Estonia tightening the hold on crypto, and Estonia came back and said, no, please don't associate us with that. We're not in any way banning crypto, because to be honest, I think Estonia has profited very much from the domiciliation of crypto companies, from exchanges to projects and all sorts. They've actually sheltered a lot of crypto companies in the last 5 years. So when I saw that news last week, I was like, okay, it's a bit strange, but obviously that wasn't the situation, and they come back to debunk it. In another interesting news, there was a publication by the mayor of Rio de Janeiro. Rio de Janeiro is in Brazil, of course, big city, capital. Well, it's not capital, but it's economic hub. And the guy is saying they want to put 1% of the treasury of the city into Bitcoin. What this is telling us, without telling us, like there's that social media trend to say, tell us you are rich without telling us you are rich. So what this is telling us without telling us really is that adoption is inching closer. And like I said critically last week, the price will always catch up to the reality of the fundamentals. So usually, regardless of what the fundamentals are saying, the price usually has a way of catching up. There tend to be disparities from time to time, and very rarely, especially when an asset becomes institutional grade, very rarely do you find a situation where that asset is, how do I say it now, is towing the line with its price. Usually it's either it's undervalued or it's overvalued. So right now, relatively speaking, I think Bitcoin is more or less inching towards the undervalued side. And of course, we'll go through the charts and I'll give you my explanations as well as regards to that. One of the ways to know that something is undervalued is how it performs on the charts, and how you see the accumulation of market makers. So on the long term, Bitcoin is still in one giant long trend, or what you call a bullish trend. But in the short term, there is this bearish correction that has affected the market since 69K. This week we saw 39K. So 39K from 69K is 30,000 drop, which is very close to, I mean, but if you had gotten to 35, it would have been 50% drop. So we've had about 40% drop now. And we've stayed in range below 45K, essentially. We've not been able to go above 45K. My estimation was that we were likely to dip below 39K because I was watching the daily stochastic, not the stochastic, the daily Bollinger Bands and the weekly, actually. And it did suggest that there was further downside room. Now, there's been a lot of interesting news this week to suggest that the market will pump significantly, but I can see that there's a lot of distribution going on to ensure that doesn't happen. So, and that's why there was strong rejection from 44K, I think, the day before yesterday and yesterday. And even though we've had so much noise today on crypto Twitter and social media, we're still sitting at 43K. Usually on the back of such news, Bitcoin will do like a 5K or a 10K candle in 1 hour. So that tells me that there's still distribution going on. By the way, what I mean by distribution is market makers usually will buy when everybody is scared. Then they will sell back to everybody when everybody is excited. That is how the markets work. That's how market makers make money. When everybody thinks the asset is going to shit, pardon my French, and they're dumping their assets in fear, at that time is when the market makers start picking up on those assets, especially if the market makers are the ones in control of the money flow. So right now, what I think is happening is because of the channels that have been provided by, quote and unquote, the US government in reverse, channels like the CME futures, these Bitcoin ETFs, no, Bitcoin futures ETF, like I explained earlier in the year and late last year, this channel have provided opportunity to flood the market with artificial supply based on the dollars and not based on the actual supply of physical Bitcoin, if you will. So because of that, market makers sitting on trillions of dollars have the opportunity to determine the flow and the direction of the market. So what we're saying is that the downtrend is still very much in play. I think we still have a few more weeks to go. For people that are coming to the event next week in London, and for people that have paid to join online, you will hear some insights on when this is going to be over and how you can position. And I think that's, generally speaking, the bull run is not yet over. We're close to one of the final corrections. And there are two possibilities on the back of that. One is that we don't get the blow off top that we really want. And what we get till the next halving is a series of peak and troughs. What do I mean? Last year, we opened the year with a bang. Bitcoin was coming from all-time high, went to 26K, then went to 30K, then went to 40K, then boom, we went to 50K. Then all of a sudden we crashed. And then we stayed that way throughout summer and then started climbing up again until we peaked at 69K in November. So what I'm saying is that there are two outcomes to this. One is we dip a little further and everybody thinks it's bear market. Then the market resumes its upward trajectory. We make new all-time high. Then everybody assumes that that's the end of the bear market and we'll take a dump again. And then the market picks up. And I'll explain my thesis as we go on today. But that's what I see happening, because what we're seeing is that we're getting more and more correlation between Bitcoin and traditional markets. We're seeing more and more involvement from institutional investments and institutional investors in this region. Interesting story that I've actually forgot completely to carry today. Well, it didn't happen today. It's been happening for a while. And that's the story of Binance. It's not on my list of news today, but I think it's worthy of mention. So what happened was actually I was reading an article from Bloomberg where they were talking about Binance and how Binance had come to be and how the founder of Binance, CZ, had been introduced to crypto by his friend, and they told him to invest 10% of his net worth in Bitcoin. And the guy went and read about it, and he sold his house and invested everything in Bitcoin. Well, the rest they say is history. Well, what I was trying to point to actually by referencing this story is that before now, Binance had not been domiciled anywhere, really. It started in China, it was chased out of China, went to Hong Kong, chased out, went to Japan, chased out, went to Singapore, couldn't establish in Singapore. Now, well, CZ is in Dubai, is in the UAE. And according to one of their stuff, they say anywhere CZ is where the headquarters of Binance is. And what's happening in UAE, by the way, is it's signed a couple of agreements with Dubai Trade Center in helping them to fashion the regulatory infrastructure for cryptocurrency in the region, which will probably be a template for many countries and regions in the time to come. So that's happening because before now, what has happened is people are not taking them seriously and felt okay because Binance, for instance, is not registered anywhere, the global company, and that there is no regulatory framework. But what they've done in the setup, the original setup of Binance, is that they made sure that each of the operating entities within major countries are sitting independent as legal entities. For guys who understand business and business setup, that's very critical because what it means is you can't really charge Binance Global for something that happened in the US because there's Binance US. So what Binance US and Binance Global will say is our only operating arm in the US is Binance US. So if you're going to deal with Binance in the US, you're going to deal with Binance US. As a result of that, they've stayed clear of most of the assaults that will have been brought against them. I know there's still what's it called, the judicial arm of the United States are trying to bring up some charges against them, but largely speaking, they've been above board. And I mean, unlike BitMEX that have been slammed by the Department of Justice, they've been above board, and now that they're getting into cahoots with the Emiratis, who are yet to start their play in this crypto game, something is going to happen. I don't know how big it is, and I don't know when it's going to happen, but something is going to happen. And the reason I say that, and the reason I brought Binance into this discussion is because when serious money, and I mean, of course, crypto is currently 2 trillion, so it's relatively serious money, but it's still small compared to the market cap of gold. When serious money starts to flow into crypto, in the multiples of what we have today as the global market capitalization, the prices of cryptocurrencies will be absolutely incredible. Like, people will not believe it. And there is history to explain, how and why that is possible, but I'll leave that for now. So when people say, okay, we're in the bear markets, you should keep in mind that since the onset of this cryptocurrency space as premiered by Bitcoin, the market capitalization has significantly and always been up. So in terms of sentiment, yes, short-term sentiment is bearish, strongly bearish, because we started the year at 46, we went down to 39, we're 43 now. So everybody has, this general angst and our anxiety that the prices will go lower. But what I kept telling, or what I've been saying, is that regardless of what the price is saying, the fundamentals are mind-blowingly explosive. I'll leave it at that. And to further corroborate what I'm saying, if you take a snapshot of what we call the Waves wallet, meaning the biggest wallets that hold Bitcoin, they've literally not been doing anything. They've just been sitting on their Bitcoins. The people that have been selling for the most part are miners, newer institutions who probably bought in and needed to offload their cash to offset their profits against taxes for early this year. Those are the guys that have been selling Bitcoin, to be honest. And the ways have simply just been buying and buying and buying. The third largest Bitcoin wallet has bought over, I can't remember how many Bitcoins, but thousands actually, since the beginning of the year. So it suggests to me that the whales are getting ready for another round of distribution, because there's been accumulation now since the beginning of November. And that, of course, that was made worse by the Kazakhstan chaos that happened in the previous weeks. For reference, Kazakhstan used to be like number 3 or number 4, depending on how you rate in terms of hash rate, because they have a lot of miners sitting there. And many of the guys that were exiled from China as well also went to Kazakhstan. So that's political uprising that happened in Kazakhstan, leading to the shutdown of the internet and power, actually did affect some of the hash rates. Ideally, again, let me explain this. Ideally, when the hash rate drops, meaning the amount of nodes available to support the Bitcoin network, the Bitcoin algorithm automatically adjusts the difficulty of the hash rates. I know I've sounded a lot of big words, but let me just explain it. For the Bitcoin network to function, there has to be participating computers. Usually these computers are huge servers or data centers. Now, as the data centers increase, the difficulty of the network, meaning how much mining power you need as a computer to contribute to the network, increases. So it becomes more difficult to mine one Bitcoin or to mine a unit of Bitcoin. However, when you have a drop in the hash rate, let's say like a black swan event, like what happened in Kazakhstan, the Bitcoin network automatically adjusts the difficulty in such a way that within a week, that drop is no longer significant, because the difficulty will have been adjusted to the active number of nodes that are sitting on the Bitcoin network. Now, just to go into the technology a bit, what this ensures is that if there is one computer, just one, still running, in the case of an apocalyptic event that destroys the entire world, if one computer is sitting underground in one bunker and still running a node, the Bitcoin network will still be active. If the computer is in space, like was done in 2019, when some startup companies sent a mining rig to space, so powered by solar. So that mining rig is also still there in space. So if everything shuts down, that one in space is still working. So as long as you have a computer still working, the Bitcoin network will run. So what that does is that it makes it the most formidable blockchain network in the world. Even with the onset of quantum computing, it will still be very difficult to manipulate and override the hash rate and the algorithm of the Bitcoin network. And what will happen this year, as you will see, is that more institutions, more sovereign states, more family funds will come to realize I'm looking for the big word to use, indefatigability of the Bitcoin network, meaning how resilient it is and how resilient Bitcoin is as an asset. What is happening right now is that there is manipulation of price because people are able to push in funds to create artificial supply via the CME futures. When it gets to a point where the amount of over supply that you have is not matching with what's on the spot market, the price will find its true level. So as we sit now, we might see the price dip a bit further, but if we don't close any day below 40K, then you can be rest assured that we're still in the bull run. But let's go on. In a very interesting news, Tonga not many people know where the country is. So I've tried to help some people's geography by putting it here. So Tonga is set to adopt Bitcoin in the later part of the year. If you don't know Tonga, Tonga is a small island country off Australia and New Zealand. So where you have these red dots on the globe, on the slide, that's where Tonga is. It's a small island with a group of islands there. And they were actually popular. They became popular in the world. People started knowing Tonga when during Olympics, this guy was their front, what's it called? Like their guild bearer. So he was, of course, he was a hot guy, and was dressed shirtless and was marching in front of this. So everybody was like, okay, where is this country that you have hot people like this? But apparently, it's the people there, yeah, they're similar to New Zealanders in the complexion. And I think they probably were originally blacks, aborigines, as they call them. They were originally aborigines that got diluted with early explorers. So now you have this mulatto and latte-colored people, beautiful people, I must say. All the pictures of them I found online were quite, beautiful people looking like a mix of India, Spanish, and the Orientals. But Tonga is a small island. They're also considering migrating to Bitcoin by November 2022. Again, that points to the direction I was alluding to, say that adoption is rising. It's not obvious because musicians are making moves in the background, and the only thing that they're pushing to the media are just the scraps. So Bitcoin falls 5%. There's a lot of noise. S&P falls 10%. They're not making the same level of noise. So adoption is going on regardless of what's happening with the price. Another interesting story that happened this week was Tesla's declaration of Dogecoin as a means of payment on their website. So if you go to Tesla's website, you see that Dogecoin is actually a payment method now. And I think this is actually on the back of Elon Musk's fascination with Dogecoin. I think he's just fascinated with Dogecoin, and in his mind, it feels like, that he calls it the irony that maybe it's what people feel is most useless that becomes the real currency. So he's fascinated with that idea, and he's always said it. So I'm not surprised that they've added it as their payment method. But I think it's going to be short-lived because Dogecoin is like US dollar. New volumes are being printed every day. So if this was Bitcoin, by the way, you probably have a 50% jump today alone on the back of that news. You had a 27% jump from what I saw in the price of Dogecoin. And that's because there's a lot of supply. So people who have been holding the bags waiting to sell, that 25% jump gave a lot of people opportunity to offload their bags. So there's a lot of bags to go around when it comes to Dogecoin. I only trade Dogecoin for speculative purposes. I don't touch it as an asset because, as you all know, it's a pure, proper meme coin. But what is also interesting to me, and this is just me talking outside of crypto now, is that the premise of, or the promise of Tesla as a company is that cool utopian electric world where your car drives electric. But what I see happening, especially in the last 12 months, personal observation as a car lover, is that everybody has, started matching Tesla, even up to Kia. Kia, they started matching Tesla with some wicked designs. I don't know, maybe you guys like cars. I like cars, so I usually just observe cars generally when I'm out and about. And I see some, in fact, there was a day I had to stop to look for the logo of a particular car that passed by, only to discover that it was a Kia. It was like out of this world. It looked like some futuristic Tesla model. So what I'm saying is there are a lot of competition coming up for Tesla. People don't realize that yet. That is not to take anything away from what Tesla has done or what Musk has been able to achieve with them, but there's a lot of headwinds, if I may say that, and I see that across all brands, not just Kia, even to the Range Rovers and to the Benz. There are like 5 or 6 new Benz models that are wickedly electric, like the kind of specs on those cars, you can't believe them. So I'm thinking to myself, okay, how is Tesla going to navigate this in the next 5 to 10 years? Well, it remains to be seen what will happen. But the electric field is definitely getting congested with competition. And because I think Tesla is going to struggle, because I just remembered now that the interior design of Tesla originally was outsourced to Mercedes. So you find a lot of things operating with the Mercedes car similar to what you find in Tesla. So as it is, Mercedes has all those technologies at their disposal. They're just probably going to drop it when it's most convenient for them. That's just an example. So really, I don't know. I think just like many of the altcoins, the promise of Tesla is more in the promise than the actual products and the future of the product itself. But again, back to crypto. Good one for Dogecoin. Probably will help people who have Dogecoin backs to sell some. FTX. I don't know people in the US probably know FTX better. FTX is another new cryptocurrency exchange that started, probably less than 3 years, 4 years now. But the only difference with FTX is that FTX went through the normal US regulatory framework, and as a result, has provided a lot of opportunities for institutional investors to get into the market. So institutions actually can trade on FTX in the US by getting involved with the sports market. As a result of that, FTX market capitalization has skyrocketed. And I think I've mentioned it here on this channel before last year, that it's one of those tokens that, regardless of what happens over the next bear market, I plan to accumulate, because just like Binance, you're likely to see a lot of growth in the FTT token value over the next 3 years, because they have a lot of institutional funds, they have a lot of market capitalization, they are beginning to do serious volume as well. So I think they even bought, no, not they didn't buy, they got naming rights for the Miami Stadium, just like Crypto.com got naming rights for Staples Center. So they have serious cash, and they just launched a $2 billion venture. It's another attestation to the fact that we're seeing serious moves being made in the background against the backdrop of the falling prices. Then lastly, I saw this news. Many of you may not know USDC, but USDC is a stable coin, just like Tether, which is USDT. USDC came in 2008, 2019. And basically, to explain what these coins are, or these tokens are, they are stable coins. What are stable coins? Stable coins are tokens or cryptocurrencies that allow you to bank your profits or to keep your profit in a stable format, meaning they're not subject to market fluctuation like you will have for other cryptocurrencies. Simple example, I bought Bitcoin at 10K. Bitcoin is now 40K. And I want to sell for whatever reason. No, I don't want to sell. I can bank my 10K Bitcoin into USDT as a stable coin, and then wait to see if Bitcoin is going to come down. Maybe it comes down to 20K. Then I buy back for more at 20K. Then wait for it to get to like 70K. Then I sell back again to USDT. So it's a framework within crypto that allows people to bank profits for their crypto. Now, I'm not going to go too much in the history of how this came to be, but let me give you just a synopsis of that. In the early days, when people were trading crypto and trading Bitcoin, nobody wanted to touch the cryptocurrency space in the financial world. As a matter of fact, they were more hostile there than now than they were then. No, they are, how do I say it now? They were more hostile then than they are now. Because what happened then was there was no on-ramp, there was no off-ramp. If you wanted to buy Bitcoin back in 2012, you need to go to some specific websites, and then you will either transfer money. You know, it was very cumbersome, essentially, for people to on-ramp and for people to off-ramp, meaning they couldn't sell their crypto as well. So these guys, and you have to give kudos to them, these guys at Bitfinex, they formed a company called, I've forgotten the name of that company. So that company was like a holding company that was supposed to help them hold their cash. And that company interacted with a shadow bank. You can Google the word shadow bank to understand what shadow bank means. But shadow banks are like office-less banks. Let me use that word. They've been operating for a while. They're like really like loan companies that have very huge credit lines with the bank. So the bank outsources their credit functions to those shadow banks. The shadow banks can loan it to whoever they want based on specific collaterals, and then they collect their interest at a higher rate than the bank. Then they give the bank this spread. So there was that shadow bank that was helping Bitfinex, and then all of a sudden the shadow bank made a run on them, and then they came up with this fantastic idea that instead of us, depending on shadow banks, why don't we create something that helps people to bank their gains without necessarily needing to cash out into fiat? That was the genesis of USDT Theta. Now, since the onset of Theta, we've had many stable coins. There was a time Theta was in peril in 2019 when the Department of Justice in the United States was charging them for money printing. They were charging them for illegal money printing. That's the simplest way to put it. But eventually they were able to wriggle themselves out. But at that time, or in parallel, what was now happening was that exchanges were now creating sister companies that allowed them to create stablecoin, because the idea behind the stablecoin is that the token must be tied to a real life asset. Now, that real life asset might be many things. Originally, USDT claimed that their token was tied to $1. Later, they claimed it was tied to 80 cents and some assets. Now, I think it's about 70 or 60 or 68 cents. But USDC capital, what's the word now? I think I'm having glucose deficiency. Capitalized on the gap and started the USDC company. So now you have USDC as a stable coin. And what this news is saying, for the first time ever, USDC's market capitalization on the Ethereum network has flipped that of USDT. What that tells me is that institutions are buying, because USDC is based in the US. It is regulated, completely regulated in the US. All the USDC being minted are backed by verifiable assets. So USDC is gradually displacing USDT as the de facto stablecoin, even though it's still cheaper to transfer USDT on some networks like Tron. You also have BUSD, which is Binance's own stablecoin. It works for a number of exchanges. But what I'm saying is this gain is organic. It's not, USDT was more like a black hole because you couldn't tell where the printing or the demand for the USDT was coming from. So the usual idea is that if an institution, for instance, wanted to invest in crypto and they approach USDC company and say, we have 50 billion, we want to invest, they will take the money from them, then print for them 50 billion USDC. With that 50 billion USDC, the market can go, the institution can go into the market and buy any crypto they want, because they now have USDC, which is tradable on any exchange. So USDC is now a very huge on-ramp for institutions, and that's why this is important. Now, the reason I carry some of this news is because they're not the most popular news, and they're not maybe not the noisiest, but they are telling a story that is not being told in the mainstream media. And that story is the story of adoption that is secretly going on. And like they say, if you're talking about the fluid dynamics of a river, the undercurrents are more powerful than the surface currents. So let's take River Thames in London, for instance. It's difficult to swim in River Thames because even though many of the times it looks calm on the surface, there's strong undercurrent at the lower levels of that river. So much so that people get drowned, even powerful swimmers get drowned because of those undercurrents, not because they can't swim, but because the undercurrents are usually stronger, way stronger than what's happening on the surface. So in the same way, the things that happen in the background are telling a story of stronger and stronger adoption over and above what's happening on the surface in terms of price action and the media hype. In order not to take more of your time, let's get into our crypto vital signs. And what we're going to do today is, let me go to, I hope I have that. I think I do. Yeah, let's go to CoinMarketCap and
I can't hear anything. Hello?
I think his network logged him out, doctor. It should log back in soon.
Can you hear me?
Yes, we can.
yeah, apologies once again. I always get into this trouble when I'm trying to query the internet. Anytime I'm trying to query the internet and I'm on Zoom, I don't know what happens. It just goes crazy. I've tried all sorts of combination. I think I'll probably just have I'll have different internet for both Skype, Zoom, and what's it called? Instagram. So what's happening is I have the Instagram on, I have the YouTube on, and I think that's just, I don't know, it's sucking the life out of the internet. So sorry about that breaking transmission. So what I was trying to do actually was to show the overall market cap relative to last week. So this was where we were. Last week was the 7th. So this was where we were last week, which around 2.07 trillion. So we're almost back at last week's levels in terms of overall market cap. And we've been dropping ever since we got to 3 trillion in in November. From a pure technical standpoint, we're still very much in a downtrend, but there's something I wanted to point out to you, and I'm going to talk about this in detail next week, Saturday, during the Crypto Bootcamp in London. And that's this line that shows more like the 50% level for this wave, the overall market cap. I'm going to use some of these principles, and I'm going to explain why they are affecting the markets and why the market is behaving the way it's behaving. Because these are the matrices that some of the market makers are looking at and they're making their decisions. So we've seen that that pink line that I've just annotated is almost like the market has approached it once and bounced off, and you can see that bounce off in the price action, because where we got to 1.8 was when we got to 39K, and that's about the same. So if you look at the Bitcoin price this week, I've used green here, you can see that that point where it's touched 39K was almost similar to the point where this touched the 1.8 trillion market cap. This is a simple graphical representation of what's happening with the overall crypto markets. And just like you can look at an ECG, a doctor can look at an ECG chart or look at an X-ray and tell you that 1, 2, 3, 4, 5 is going on. When you look at this chart, a number of things become immediately obvious about where we are regarding the markets. I would say that until the market drops to, let's say, until the market drops below these levels, which is around 1.68 trillion, that will bring us to around this region. That's around 28K. I don't think we're in a bear market. And as a matter of fact, like I said last week, I'm watching out for when the price is going to touch the lower end of the standard deviation of price. Currently, that lower end is sitting at 38K. So it's been oscillating between 37 and 38K. If we touch 38K, or if we touch 37K in the coming week, guaranteed, we're going to have a reversal in either that week or the week after. So that's the overall market cap. Altcoins are similarly doing about 1.2. Unfortunately, my internet will not permit me to show the market dominance, but market dominance has stayed almost constant at around 40%, meaning that is largely 40% in Bitcoin and the rest in altcoins. I'll come back to the chart later. In terms of fear and greed index, well, a little bit up from 18. We're at 18 last week. During the weekend, was it during the weekend? There was a day we were at 10. And I think that was when the price was going really down and everybody was freaking out. But two things to observe. Like I said last week, the only times that we've ever been below 10, just 4 times in the history of this metrics. And I've always said that this metric is a very, very good indicator of market sentiment. You cannot bet on this metric and go wrong. Meaning, if you buy at extreme fear at 10, you cannot go wrong. Max 6 months, you will be in profit, and not just normal profit, serious profit, depending on what token you invest in. And that's because this metric is an AI-based metric. It's collects a lot of data across various platforms to actually generate that sentiment. So when the sentiment is really bad, it is a good time to buy. Like it's been credited to the Rothschild, one of the Rothschild family members, that's when there's blood on the streets, there is a time to buy. That even if it is your own blood that's on the streets, that it is still time to buy. That's usually not our sentiment as general people. but that's the way it works with investors, big time investors. In terms of market psychology, a number of things. Okay, hold on, please. I think my live session has been cut short because of this feed, anyways. Discard live. I don't want to discard. Yeah, this is sad. Means that okay, I'll probably just create a link to it. I don't know why it's ended. It won't allow it to share. And it's, okay, just we'll probably find it to sort that out. I'll probably link it to the YouTube video. So this cheat sheet is just to help us place ourselves in the market to determine where we are, generally speaking, in terms of market cycle. When it's here, it's usually the best time to sell. Right now, we're around here. I think people are around here because we're almost at par with optimism. So we're around here. Everybody's wondering what's happening. Are we, is this, is market dead? Is Bitcoin going to zero? It's never going to zero because as a matter of fact, if you look at the chart over a very long period of time, you find out that it's actually one giant bull trend that's been on since the very onset. So because of that, it's very important to understand for each major cycle. So in the major cycle, to be honest, we're still here. In the current cycle, we are probably somewhere between panic and denial because people are like, oh, this market is gone crazy. If we dip below 39K again, everybody will go into capitulation and anger, like, yeah, I think everything is over. So it's important to keep that in perspective, just to know that, we're still on. As I was saying before, the overall trend. So this technical analysis snapshot is actually the weekly chart. I think, yeah, is the weekly chart of Bitcoin over since 2012. So if you plot this, and I'll show you now, if you plot this on a logarithmic scale, what it shows is that, where is that chart? Yeah, so this is what I was showing. So if you plot this on a logarithmic scale, which, yeah, this is going to be skewed a bit. Just give me a second. Take this out. What you immediately see is what I'm about to show you. The price has been in a giant long trend. So if you consider it from the top, which is 70K to now, the trend is largely up, except for the onset in around 2009, 2010, up until 2011 when it started trading. Since 2011 November, essentially, or let's say 2012, what we've been is one gigantic long trend. And that trend is going to continue. So regardless of what happens, as you can see, the sinusoid and the waves that we've seen all through that time, the trend has been up ever since. So let no one kid you that Bitcoin is going to zero, because see, when this chart started charting it, the bottom was $2. Think about it, $2. Now it's 40K. There was a very funny picture that I saw during the week that was really funny. Somebody was showing 2021 Bitcoin at 40K. Muscular and very desirable guy. 2022 Bitcoin at 40K was one fat guy that was not desirable. So it's all about sentiment, and it's all about perception. Everybody's angry, like people are like, oh, Bitcoin is going to zero. It's not going to zero. This colorful ribbon, just to explain for people that are watching and wondering what's on the chart, this colorful ribbon that I have on the chart is what you call EMA ribbon. It's a technical analysis that just bunches together different moving averages, quite a large bunch of moving averages actually. And the idea is to help. I don't usually use it. I just like to put it on today to corroborate what somebody was saying. the idea is usually to find out where the price is relative to the moving averages. So each color in the moving average represents a particular moving average. So when the price is sitting above the moving average, really, it is generally considered that you are in bull market. When the price is clearly below it, it is considered that you are in bear market. So this, because this is a weekly chart, if I took you to the monthly chart, you see that the price is still very much above the EMA ribbon. But even on the weekly chart, we see that we've not even broken through in terms of getting to the last of the EMA ribbons. And like I showed you the other time, this indicator, just take this out. This indicator is an indicator, the Bollinger Band, the indicator that checks for the statistical standard deviation of price. And both institutional investors, market makers, and algorithm and AI bots always have to factor in the standard deviation of price, because that helps them as well to position either to bid or to sell. So what I'm saying is, on the weekly level, we've not touched the lower end of the standard deviation. The last time we touched it here, 3 weeks after, was when the market started going up. And before that time, we actually have not touched it since the beginning of COVID. This is the beginning of COVID, March 9. So the last time we touched that standard deviation was the beginning of COVID. And since that time, we've not touched it. So we are very close now. At the time where we were here at the middle, I was thinking, yeah, we're not going to touch it. But now, because of the downward pressure or the selling pressure that we've had since November, we're quite close. So my thesis is that, one, once we touch this, whenever we touch it, if we touch it this weekend or next week, we're likely definitely going to see a rebound, strong one at that, because there's also another long-term trend line that's coursing through this price range. And then we have what you call the Fibonacci line as well, that's coursing through this time frame as at 35K. Then another thing I mentioned I think that was last week. Yeah, it was last week that was mentioning the cost price and the production price of Bitcoin. So I found that indicator, I plotted it here. Now, this is a true reflection of how the market views the value of Bitcoin. So on the average, the value of how much it takes to produce one Bitcoin is always ranging. So right now it's sitting at about 34K. It's usually around 35 on the average if you factor in electric cost and all that. So what happens, generally speaking, is that anytime the price is close to this production cost, you tend to see a rebound. So when we touched it here was in May. Shortly after was when the price started going up. If I go all the way back as well to the COVID era, when people sold off, once people sold off, and we capitulated essentially because of the COVID pandemic and people were running to cash, you could see that the price literally just rose out of that. And this production cost is based on, one, the mining power that you need to mine Bitcoin and the electric costs. Now, that mining power increases every 4 years, like I've mentioned in times past, talking about the halving. So the mining power increases every 4 years. So the production cost doubles every 4 years, and the reward halves every 4 years. Pretty interesting algorithm, if I may say. And that's why Bitcoin is never going to go to zero, because it costs 35K to produce one Bitcoin right now, true cost. So no miner will sell their Bitcoin in their right senses unless there is a black swan event, another black swan event, maybe Delta Cron or whatever cron that we have next, a more serious variant that is flesh eating. Maybe we'll see miners selling their Bitcoin. But other than that, I don't expect the price to go below 35K. And that's why I said, somebody asked me, I said, yeah, the lowest I think the price can get to on this leg down is 35, 34K. And I don't think it's going to make it. If it touches that level, many people will be buying. And like Mike Novogratz of the Galaxy Digital said, many people are positioning at 38 to 40K. And that's why you saw the bounce here at 39K, because there are so many institutions waiting with loads of cash, ready to take the opportunity to buy. So in essence, what am I saying? We have a downtrend, yes, but that downtrend is quite short-lived. It's going to be short-lived. And one other thing that I'm going to show you in the events, the bootcamp next week, is that this current downtrend pattern is similar to another one that we've seen before. But I'm going to leave that till next week. But generally speaking, I think the downtrend has at least 2 to 3 weeks more before we start seeing some major move upward. Because what we've seen this week, for instance, is that we've not been able to break 45K. We didn't even touch it. We stopped short at 40K. And if we zoom in, let me expand this a bit. If we zoom this in and look at the pattern being printed on this daily chart right now, what this means is that the price is headed further down, because if we were to interpret this in pure technical terms, you've had a bounce. On top of that bounce, you have what we call a bearish engulfing candle, meaning the price of one day overshadows the price of the preceding day, which you have here. If the price today cannot get back to 43,800, then guaranteed the price is going down. Now, it might not stay down. It might, as I said, now we have on the daily charts, we have up to 39K as our lower limit. It might touch 39K a bounce, or it might touch these two trend lines. So these two trend lines are lower time frame, but they are trend lines that have been tested many times. So you can see we were under this trend line for a very long time. We broke through, went to 50K, then dumped back again. We've broken through again. Now we've stopped out at 44K. I think we have another leg down before we see a significant move up. And as I told everyone, even though I don't want to call it the nano, I have to call it the nano economics suggests that the price is about to turn, but the macro is still down, because this is like what you call a dead cat bounce, just like you had here. You bounced higher, but you didn't reach the previous high. Then you came down again, so we bounced again, but we didn't reach the previous high. So at the minimum, I expect that we'll do another touchdown. That second touchdown might be the beginning of the recovery of price. So I think that's all for me. The Ethereum chart looks pretty similar to what is printed on the Bitcoin charts. So I'm just going to call it a day. Again, if you're in London next week, Saturday, join us at the Very Grand Connaught at 61 to 65 Great Queen Street. It's close to Holborn Station, so actually like between Holborn Station and Leicester Square. As I said, if you belong to the WhatsApp group and you show up physically, you get a free pass. If you want to join online, you have to pay for the tickets. I think that's where I think I have that. Oh yeah, I thought I had it, but apparently I don't. Oh, come on. Anyways, if you go to my I think my Instagram bio, and I have the link to the event there for those who want to register online. I think I have it on Facebook as well. And I think I posted it on Twitter. So you can get the online version. If you want to join online, you have to pay, of course. There's a ticket cost to pay online. For VIPs, there's going to be an additional session for people who pay for VIP. It's really a free event in the real sense of it, because the costs of the tickets cannot pay for the cost of the venue itself. But I think it's my own way of giving back to society. We will have 4 of this year, one in London, one in Manchester, one in 2 other locations in the UK every quarter. But the one in London is the first. Obviously, it's going to go more expensive because I need to cover my travel costs to go to London, to go to Manchester and other places. So this is going to be cheaper than all the others, believe me. So that's it for today. If you have any questions, please unmute your mic and let's have it. If you have any question on Instagram, feel free to type in your question and I'll read them out and I'll answer them. Thank you. Yeah, I think it's just on the cusp of 8 o'clock. If you don't have any question, that's fine. I'm happy to let you go. I think I've become very hungry and hypoglycemic. Go ahead, Balm Del. Unmute your mic and ask your question. Yeah, you have the floor. I don't know if I'm the only one that can't hear you or anyone else can't hear you, but I'm not getting any sound from your mic. Okay, you can type in your question in the chat as well. I'll read them out and I'll answer them. If you're not getting any sound from your device, I'll answer the question in the chat as well. Okay, I think everybody is pretty sorted for tonight, and I think I've allayed some people's fears. Some people were afraid that the market is going to zero. The market is not going to zero. Oh yeah, that was something else I would have shown.
But the profit will reduce.
Sorry, Dr. Valerie, go ahead.
I said the market may not go to zero, but the profit will reduce.
You know, there's a Yoruba proverb that says that the ram that does a reverse movement it goes to collect more power. I always find fascination in that particular proverb because it has backing in physics. When a ram or a bull or anything retraces their step in a fight, basically what they're trying to do is to gather more momentum, because the farther they are from the target, the more they run, the more momentum they have, mass times acceleration. So really, if you see a market going into quote unquote recession or pulling back, it's because it wants to spring forward. So for each spring forward that you have, you definitely have a pullback. So it's just, as they say, it's a natural phenomenon. Is it safe to say that the buy point is between 37 and 38K? Anything from 39 is fine, because even 40 is fine. If we see 38K again, no, it doesn't mean we're in bear. What I said is that if you see a daily candle, and this is one of the things I want to also teach people next week, Friday. This is a daily candle, for instance, a daily Bitcoin candle. If you see a daily candle close below these levels, it means that we're going to have a protracted period of consolidation. The price is probably not going to go up for a while. However, the last time we touched 40K or touched 39K was in September. So now we've dipped down to that level one time. And the last time we touched it, we actually were sitting outside the standard deviation. What I'm saying is there's a good room to touch it now, because 39K is still within standard deviation based on what's on this chart. If it touches it and bounces off, that's fine. That means that there's a lot of demand to buy Bitcoin at that level. However, if it touches it and the price stays below, then it means that we have a protracted bear market to go. That's what I mean. How about your mic?
Oh, sorry.
Okay, so for Dio, the question you asked, yes, I think it's safe to say that if the market dips below 48K, below 40K, and doesn't close there, I think it's good. It's fair to say that it's a good buy entry. Yes, If it gets to 35K, it means it's at cost price. Now, at cost price, a miner can still choose to sell because usually they will have Bitcoin that they may hold in since 10K, especially if they are old miners. So they can still afford to sell some. But if it gets to cost price, it means there is little or no wrong way for the price to go lower because you can only sell the Bitcoins you have before that time, before declaring a loss. And that's why I said, the price will definitely react strongly if it gets close to the cost price, which is here right now, where you have this pink line. That's 34,366. So really, anything below 40K is major entry for Bitcoin. And as I said, you can't have the end of a bull run without a blow off top. We've really not have that blow off top, like I've always been saying. So it's beginning to look more and more like this might be a drawn out bull market as opposed to the usual blow off top and three years of bear markets. Also bear in mind that the next halving is 2024. By 2024, once the halving happens, it means that cost price is going to go to 70K plus. So what it then means is the price cannot be sitting at that level anymore. The price before 35K, the real cost price for 35K was around 12,500 thereabouts before we got to this level. But let's try and do a deep dive to 20. So this was 2020, right? Halving happened in 2020. Yeah, this was 2020 May. So halving happened around here. So before halving, cost price was sitting at 6,000. Once the halving happened, it actually more than doubled. The price went haywire. Before that time, 2017, the price was 4,000. That was the cost to mine. At the peak of the bull run, 2017, the price was 4,000. And even when the prices were crashing, it didn't touch the cost price until 2018 August, by which time the market had lost how much in percentage market cap? 70% of the market cap. So I think we're not likely to see that. And the dynamics has also changed. Miners are now more in cahoots with institutional investors who are able to give them money. Like I said, when all the miners have all the funds they need to run their businesses, there will be no Bitcoin to sell. That is when you see the real explosion. But for now, I think that this will represent the floor for prices for a long time to come. Any other question before we call it today? I'm happy to let you have a nice weekend.
Sorry, Dr. Deme, what's your take? Maybe like we're already preempting, like we are likely to have another dip. What if one sells now and buy back when the market falls?
Well, that's assuming that you'll be there when the market falls. There's no crack.
Maybe I'm between Abuja and Lagos. All right. Those are the reasons why one just have to be.
If you are savvy, I mean, like someone is savvy like you are, and you're a relative veteran when it comes to investments. One way to do it is to, sell at a particular price and then place a limit order. Yeah, I think I'll talk more about limit order on the boot camp as well. Place a limit order, but the problem with limit orders is that it might not get there. It might not get as low as that limit order. It might get there. You never can tell. So if you're not trying to get the money out for a living expense, then you might just wait for significant opportunities to buy. I'm going to it was next week Saturday that show when you can buy and just forget about it, and how you can also increase your overall portfolio without necessarily having to check what the price is at any point in time. I think we'll have some time to look into that next week. All right, guys, have a lovely weekend. See you again next Friday. And for guys, minimum amount of exchange.
Thank you.
Yeah. Somebody asked the question about
bless you.
minimum amounts. There's no minimum as long as, 10 cents or maybe 1 cent, depending on what token you are buying. Limit orders are limit orders. All right, guys. Thank you very much indeed for stopping by today. See you again next week. And don't sell your crypto into market weakness. Just as I usually.
Thank you very much, Doc.
Don't mind Dr. Laliri.